Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 121 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. Today's podcast will explore some new leading economic indicators and give you some more insight from this year's Top 100 Electrical Distributors survey. We'll also be checking out some key weekly economic indicators that can offer an early idea where the market may be headed. These 5 weekly indicators are initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series for 2025 and over the past 5 years for well over 100 episodes. For the week ending May the 10th, the advanced figure for seasonally adjusted initial unemployment claims was 229,000. That's basically unchanged from the previous week's revised level. And the current unemployment rate stands at 4.2% according to the latest data through April from the U.S. Bureau of Labor Statistics. Only 2 states had decreases in unemployment claims of at least 500 for the week ending May the 10th. Michigan had a decrease of 5,903 claims, and California had a decrease of 905 claims. Other states in the top 5 when measured for decreases in claims were Ohio, New York, and New Hampshire. These states all had decreases of less than 1,000 claims each. Only 2 states had increases in unemployment claims of more than 1,000 for the week ending May the 10th. Massachusetts had a fairly large increase of 3,446. Virginia had an increase of 1,200. 3 other states with the highest increase in claims in the weekly data were Illinois, Pennsylvania, and Nebraska, but they had comparatively small increases, and none of them had an increase of more than 600 claims. One of my favorite leading indicators to watch the overall U.S. economy is freight rail traffic. It's a good measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly at www.aar.org. For the week ending May the 10th, total U.S. weekly rail traffic was 495,552 carloads and intermodal units. That's up 5.7% compared with the same time last year. Total combined U.S. rail traffic for the first 19 weeks of 2025 was 9,301,159 carloads and intermodal units. That's an increase of 5.2% compared to this time last year. And despite all the talk about tariffs, the freight rail traffic is really holding up. I wouldn't say extraordinarily well, but very steady, very strong. And this is a good sign for the overall U.S. economy, despite all the concerns about tariffs and people wondering if a recession is around the corner. Freight rail traffic does not indicate that at this point. One of the reasons I am bullish about the overall U.S. economy is this freight rail traffic and some of the indicators when you look under the hood at some of the individual categories. The largest of them all, to me, I think it's the most important of them all, is intermodal units. These are the shipping containers that are used to transport products by cargo ship, by freight train, and by truck. Intermodal units were up 7.9% over the past year, followed by coal at 6%. And grain at 4.9% compared to this time last year. Farm products, excluding grain, was up 3%. The only freight category with a significant decline for this weekly data was metallic ores and metals. It was down 4.4%. So all's good. When you look at the chart, you can see an awful lot of green there, not much red. And again, total intermodal unit, that is a large chunk of all freight traffic. And it is very important traffic because it's goods of all sorts that are being carried in those containers, whether you see them on a truck, whether you see them on a train, or if you're on one of the coasts, if you see them coming in on any of the ships, good sign right there. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks oil and gas rigs that are operating. The data is available each week by state, by basin, and nationally at www.rigcount.bakerhughes.com. In this slide, you get an idea of the largest oil and gas deposits. It gives you a good sense of just how many of these large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. We didn't find any notable changes in the weekly Baker Hughes rig count data. The total count of operational oil and gas rigs was down 2 rigs to 576 rigs, and this count is down 28 rigs or 4.6% over this time last year. Texas, the nation's largest oil producer, was down 2 rigs in the most recent data to 271 rigs, and that is a 6.6% decline. That's actually a comparatively mild decline compared to the data we have seen for this Texas over the past year, which in some rigs was running decreases at a double-digit year-over-year rate. Oklahoma was flat for the week, but is up 25% this year at 55 rigs, and that is really the most significant increase of any of the large oil-producing states. The current price of WTI, or West Texas Intermediate crude oil, as of May the 16th is $62.49 per barrel. Year over year, the average WTI price per barrel is just over $70 as an average, and it's a very healthy price. But the WTI oil hasn't seen this $70 mark since early April, and that is before the tariffs announcement hit. Economists like to call copper pricing Dr. Copper because it's the leading economic indicator for future market activity since copper is used in so many industries. The construction industry is among the leading markets for copper because of its wide use in wire and cable and copper plumbing pipe. The current price of copper as of May the 16th is $4.59 per pound, according to the latest data at macrotrends.net, which really has a mountain of data for all sorts of different commodities, oil, stock prices as well. I haven't delved into that too deeply, but yeah, macrotrends.net, great source of information for all sorts of different economic activities. I always pull the WTI oil price data and copper price data from that. Copper spent most of the May in a range between $4.60 per pound and about $4.80 per pound. It's still quite a bit higher than its year-over-year average right now of 4.43% per pound, but it has been a wild 12 months for copper, which has seen a low of $3.94 per pound and high up to $5.24 per pound. So that's quite a range, and it's a swing of $1.30 per pound for a 33% price change from high to low. I'm experimenting with some new ways to present a quick look at U.S. economic data that affects the electrical market, and I'm doing it by fine-tuning a chart that compiles this data that I'm calling the electrical market by the numbers. The amount of market data out there can be a little overwhelming, and I'm trying to put together something that would offer a quick look at some of the current market indicators. I'm experimenting with a monthly compilation of 10 key data points that will offer a feel for market conditions. I wanted to primarily feature leading economic indicators, but we'll also be looking at other data that catches my eye at the time of publication. In the not too distant future, I can see this particular podcast presenting the electrical market by the numbers as an overview and then digging into some of the data of particular interest. We'll continue to run the weekly data points that we get for freight rail, unemployment, and oil rigs, because I think they are important, but I think I think I'm going to supplement what we cover in the podcast here with this particular chart data. The next slide is going to show you what I've picked out for our inaugural and look at the numbers here. Alrighty, let's look at the data I've collected for this edition of the electrical market by the numbers. I'm always drawn to the top 4 data points under electrical market conditions, and that because they're pretty good leading indicators for both the electrical market and the over construction industry, which is obviously a very key end user market of importance here. I hope my chartography or the graphics that I presented here are okay. They're a little crude, hopefully somewhat effective, but I'll have one of our art directors maybe give me a fine-tuned point of this chart once I decide exactly where I'm going with all this. But at the top of the slide there, for a good forecast, and these will always be in the compilations here. I like to look at the AIA's Architecture Billings Index, the Dodge Momentums Index, with a test on project activity. NEMA has a terrific monthly survey of NEMA executives on future market conditions and current market conditions and electrical wholesaling. We do a survey every quarter with vertical research partners where we talk with primarily distributors, some reps and manufacturers on market conditions. Like to give the actual data point, the exact data point we're looking at, and the month-to-month and the year-over-year changes to kind of give you a sense of it. So when you do look at that, and I wish AIA is a little bit late, I think, in getting out their April data on this, but and this condition is looking out, when you look at their billings index, I believe it's looking out 6 to 9 months if I'm not mistaken. The most recent month-to-month change was down in March. Year over year, it's up a fraction there, so kind of steady, not the most glaringly optimistic of all our indicators. Dodge Momentum Index had a good month, and sometimes the momentum index with Dodge will swing very heavily on one of the biggest construction project categories, which is, of course, data centers. But most recent data looking pretty good, up in both month to month, year over year change. Even though year over year percent was up quite a bit, 22 points. Month to month is up just a fraction. As I mentioned, the EBCI future conditions for April, month-to-month change was up fairly significantly. Year over year was down very significantly, 33%. So a bit mixed on there in the anecdotal, in the analysis that NEMA provided with this most recent data. There are definitely some concerns about tariffs and all, but up and down as you can see. Our EW Vertical Research Partners, or VRP quarterly forecast, really in good shape, both cases, up 2.6% compared to the last quarter for this, and they were looking for the year-over-year change going up for looking at over last year, also up about 2%. So it's a nice, steady, if not spectacular, increase. Isn't this what distributors think? Distributors I found both in this survey and also our electrical wholesaling data, maybe a smidge optimistic, but hey, it's real world. They are looking at the numbers. They're seeing what kind of bids are coming in, what kind of contracts they're working with, and they're in touch. But they said maybe just a hair to the optimistic side. But hey, that's not bad. As you can look at it, looking pretty good. Some of the other information, I know it's of critical importance, and this will always be in any of the electrical market charts that I put together. Electrical price index, we talk about that a lot here in today's electrical economy forecast, comes from electrical marketing. We look at over 20 different electrical product categories. If you want to get the monthly data to see all our pricing changes for these categories, you can subscribe to electrical marketing. It's $99 an annual year. I steal if I don't say so myself. It's and you can subscribe there at www.electricalmarketing.com. A fairly mild increase. This is the March data, is most recent that we have right at this moment. April is going to be, it is just in. I don't have time to factor it into this particular presentation, but it'll be in next month. Up for the month, 1.1%. Year over year change, 3.4%. Fairly mild increases on both cases, month to month, and again, that is a total index. We also ask in that electrical wholesaling vertical research partner survey, we do ask on pricing, and in both cases up about 2.3% month to month. They saw it, and this is, or I should say, quarter to quarter. In the case of it is a quarterly survey. Apologize there. And the quarter for the first quarter, when the results came in, the survey came in. I think it was the first week. Finished up the survey second week of April, up 1.4% compared to where we were last year. Copper prices, we always, you guys are quite familiar, guys and gals are quite familiar with the copper prices that as we collected for this podcast we've been doing over the past 5 years. I think it's obviously very important enough to have it right here, and it has been a bit all over the place as you can see, but definitely up a bit over year, up 32%, month to month up around 6% from where we were this time last year. The employment data, I'm not sure if I'll have this in every time for this. There might be some other data points. As I mentioned, I'm trying to keep this short down, 10 data points, 12 at the most. And one thing I want to draw attention, and not the fact that electrical contractor employment for the most recent data from the Bureau of Labor Statistics, the fact that it's down, and it's down about 3%, which is fairly big. Year over year, it happens to be up 10%. But when you look at this data, I was really struck by the fact that the employment data has maintained by over a million. I've been looking at this data for years, and for the longest time, I always looked at anything over 800,000 on a national level for electrical contractor employment. I thought that was a pretty big deal, but here we are looking at something that's looking at significantly higher than that, and again down, not an insignificant decrease, and we'll track that on the month, but still at a very very high level. Industrial employment was just fractionally changes, so I put it in as yellow. That is going to be an interesting number, obviously going ahead here. There's a lot of types of auto plants that had sparked, and a lot of talk about the employment at semiconductor facilities. We'll see if that continues. Those are big market drivers. Obviously, the construction employment at data centers. Data centers themselves don't have huge numbers of employment operating once they're up and going, but I just thought the fact that we're kind of leveled out on industrial employment, at least through April. So hope this is of interest. I'd love any feedback. If there's some other stats you'd love to see every market, every month discussed, but I just wanted to give you an idea where we're at with my first picks here. Yeah, we'll wrap up today's podcast by looking at a couple, just two data points at the for our top 100 distributors the survey that came in. By this time, our next broadcast, I should have the top 100 distributors pretty well finished, and I'm hoping to be able to present that data to you in the podcast. But today we'll be looking at what top 100 distributors said about the specific market segments, which are done well so far in 2025. And then we'll also be taking a look at what an area I always find interesting is the ERP systems that the top 100 distributors and the total dominance basically in this list by a few specific vendors there. So we'll take a look at those in the following slides. Yeah, on this slide, we're looking at when we asked the top 100 distributors which end use market segments are showing strong growth so far in 2025, which are lagging behind. In the blue are those markets showing so far some good growth. Lagging market in red, green is not my market. So, if you look at the blue, if you're looking at the showing growth so far, commercial new construction more than 40% said that was showing growth so far. Industrial MRO is the highest. So it's about 50% of respondents saw growth in their MRO category, 40% for industrial OEMs. Industrial new construction, right about just below 40%. Interesting that it's almost exactly tied with the amount of folks that say it's lagging the market or showing growth. Very evenly split from respondents on that. And you can kind of get a general sense. Residential new construction, that actually verifies all that we've seen in market data on that residential new construction lagging the market in 2025, really no surprises there, well over 40%. Very small amount of our distributor respondents saying it's showing growth so far, and that's just over between 20 and 30%. So yeah, this gives you just a little bit of a snapshot of some of the markets. I should also mention the utility market, not a market for all of our EW readers, but certainly a big market for many of them. If they're in utility, it's a nice market driver to say at least, and we'll be certainly see more and more interest in this market as we go forward with electrification, building out the grid, connecting it to more renewable power sources, and revamping security. It's going to be a lot of work in here. But right now, as you can see, as I mentioned, not as many people in this market. About 40% say no, we don't do utility work. Of the ones that do, about 30% seeing some growth, a little bit under between 20 and 25%. That it's a little slow right now. So just kind of a quick snapshot of these market segments. Yeah, we ask this question every year. Top one of the top largest distributors, which are ERP system that they're using. Every year, kind of comes back very similar that the the Epicor, and in particular, they have two of their two largest computer systems are by far two of the largest. If you add them together, it's about 44% of our respondents. And the data that came in from, I think we actually had about, let's call it about 3 dozen, I think, distributors did give us data on their systems there. So, and the Epicor Eclipse is very big. Interesting that if you look at the specific systems, Infor with their SX.E, forgive me for not knowing the acronym there for Infor, but also fairly large and bigger than Profit 21. But the top system, Eclipse, Infor, down at 20.9%, Profit 21, 16.3%, SAP about 7%, Custom 7%, and a fair number of others. There's quite a few. I'll have to look at our information that we have in the coverage of the top 100. We'll get into some of the other systems. It's kind of a onesie twosie type of thing, but a fair number of companies are using a smaller system there, and I did find that to be interesting. But the trend lines continues to be strong on the Eclipse and Profit 21 combined being the two, but I do see some growth on Infor with the SX.E has definitely, I believe, picked up. I'm going to have to check my numbers going back, but that 21% approximately number looks like it's been growing pretty nicely for the folks at Infor. Hey, that finishes our broadcast for today. It's episode 121, and we do thank the folks from Champion Fiberglass for sponsoring today's podcast. We thank them for sponsoring 121 episodes, going all the way back to 2020. So it's been good friends to the magazine and to the electrical construction and maintenance, our sister publication. So my hats off to Champion for all their support. contact me if there's any type of economic data that you'd like us to be covering this podcast. And specifically, I mentioned that electrical market by the numbers. If you have any ideas for how we can make that even of more interest, you can contact me with the contact information on the slide here. If you're going out to the NAD this week down in Marco Island, unfortunately I won't be down there myself this year, but enjoy it. It's a beautiful hotel down there. Always a great event. I hope the numbers are strong. Until then, we will have our next presentation on Monday, June the 2nd. We should have a pretty good feel of our top 100 distributors by then. Hope to have some good information for you there. We can start looking at that information in the podcast here, and also the other analysis that we'll be posting that week at Electrical Wholesaling's website, wewweb.com. Until then, be happy, be healthy. Hope you didn't get caught up in any of this crazy weather we've had with the tornadoes that were roaring through St. Louis and Kentucky. It's that time of the year, but hopefully that was hopefully not for any of our listeners, not a big issue. Till then, we'll talk with you in 2 weeks.